Okay, let's start the webinar. Welcome, everybody. It's Monday morning. It's the start of the trading week, and the Asian market has just started a while ago. And let's have a look at what's happening out there. And the first place I like looking at is at the 360-degree indicator, or EA. It's in fact an EA. Okay, thanks for reminding me. Okay, here we go. So this is what I'm looking at. I'm looking at the currency strength table. And what stands out, as I said, was that the Aussie is really remarkably strong. It's the strongest in the last 3 hours, the last 6 hours, the last 12 hours, the last day, week, and month. Amazing. It's just made an amazing recovery. I think it's gone through really bad times with the fires and things like that. And obviously, that is all history now, and the currency is recovering quite nicely. As always, if you do have any comments, questions, or remarks about what's going on in the market, but also in general about trading techniques and EAs and that type of thing, then certainly shoot them through, and I'll do my best to answer them. So the Aussie is obviously moving quite well. And if we look over here, you'll see a lot of Aussie crosses being overbought or oversold. So you've got, there's one, the Euro Oz, the Oz Franc, and the Oz New Zealand. So it translates itself into the indicators as well as into the charts. So these are just like the top end reviews, and we can go and look at the charts in a lot more detail. Okay, so let's have a quick look at the charts, and I'm going to start with the most probably with the multiple moving averages on a 4-hour basis. That's most probably the way to go. All right, so these charts remind me of the crocodile mouth. You can see that looks like a crocodile mouth. Now, there's a few of these charts that have got that crocodile mouth look about them. The pound is obviously on a trend upwards, and there it's going. And then the Oz, which we've just been talking about, really strong, and you can see the angle is so much stronger than the pound. The euro is trying to do that, but it's Johnny come lately. It's just quite slow, so it's not up to the speed of the Oz. Now, if you look at the Oz movement and the delayed euro movement, then if you look at the Euro Oz, you see this beautiful trend that's developing here. I'm not one for joining a trend, but this trend is just so beautiful. You know, you either just sell the new low, or find an excuse to get into this downward trend that's happening over here. We did last week say to straddle that particular one, and look how well that straddle would have worked out last week. So that was a pretty good identification. Here's a straddle that didn't quite work out. It worked, but it's not really maturing that well. And here's one that did work quite well. So these straddles, and there's the best one, really, you know, when you see these consolidations, a straddle is a good idea. And even here now at the moment, the pound yen is coming out of a consolidation, and it might be worth following that buy move that's happening up there. So the market is coming alive a little bit. There are some currencies, the Aussie moving quite nicely. The yen, although if you look at the Aussie, the US yen, it doesn't look that dynamic, but the yen crosses are actually moving quite well. There's the Aussie yen. Where's the... Oh, no, not that good. It's only the Aussie yen that's really moving well. The rest are pretty quiet. So the Aussie seems to be driving a bit. The US dollar, let's have a look at if the US dollar's strengthening or weakening. Yeah, it's weakening. There, it's it's weakening and weakening and weakening. So overall, the US dollar is weakening, and that's what's allowing a strong currency like the Aussie to actually perform even better. So the Aussie USD is quite good. Okay, regarding the use of channels, at what point above the channel do you say to yourself the trend has changed? Take the Euro USD, for example. All right. You're talking about channels. Yeah. Or okay. Look again. One has to look at what I like using. It's a good question there. I like using trend lines as my. You see, trend lines is like dancing. If you look at it, look there's the buy trend, there's the sell trend, and that kind of thing. So trend lines are one of my major reasons for identifying trends and reversals of trends and things like that. So there on the screen you can see some trends that I've drawn there, trend lines. Most probably not that one, but a bit more like that. And you can see that trend lines actually provide a fantastic way of deciding has the trend changed or not, is when there is a upward trend line violation from a downward trend, or a downward trend line violation from an upward trend. And yeah, as you can see there, that's a pretty good indicator of a, let's say, major trend reversal. Anybody else in the room got any other ideas on trend on the question? When do you say to yourself the trend has changed? Now, the problem with that is that the trend's already moved quite a bit. You see over there, it's moved quite a lot over there. It's moved a lot. So you need a reversal of trend to confirm that the trend has changed. You can't just say right up there, for instance, it's bounced there. That's where the trend changed, because there's very little. There's very little evidence at that point in time, but here you can actually see a strong reversal in trend. Okay, let's have a look. Is there anybody else who has any other ideas? Yeah, trend lines. Then the other one, and I'm just going to remove the trend lines. In fact, I can just remove it like this. Okay, so that's one way of telling a trend reversal. Any other ideas out there? Because you can actually see it on the screen here quite clearly. There's a few really nice, and they're pretty old-fashioned ways of looking at it, but they still work pretty well. So the other one is the old-fashioned trend line violation method. So if you look at the red moving average there, trend line moving average violation. So if you look at the red moving average there, and we can make it maybe, what I like doing with the moving average is actually just pushing them forward. Yeah, the RSI is not the greatest for a trend line, but you can use the RSI 50 line crossover. Let me just see which is that's the fast one, and this is the slow one. All right, so if you look at the red one, I like moving the moving average forward by about, normally about, I'm just going to do 6 in this particular case, 6, and then we close it. Now, what that's done is it's moved the moving average. As you can see, it's just moved it 6 places forward. Now, I find that to be a great trend line, a trend identification method. So so there we go. So there's the end of the downward trend. There's the end of the upward trend. There's the end of the downward trend, end of upward trend, and so on and so on. Okay, so those and if you look at the charts visually, you will see that those actually do give good trend line violations. Now, the problem is people want to say, oh, that's a bit late, because if you're giving away a lot of the trend there, and then at the end here, you're also giving away to get out of the trend. So if you use moving average crossovers, like these are actually very, very good, you would get in there and you'd stay in, and you'd get out over there and you'd stay out, and you know, that kind of thing, or you'd get into a sell trend over there. So trend lines and moving averages provide really good guides as to trend, as your question was, when you tell when a trend's reversed. So it's either a trend line violation or a moving average crossover. Now let's slap an RSI on here and see what that tells us. See, I've got a 5 there, but that's fine. Okay, so let's have a look. So that's where we identified the, oops, all right. So what I'm going to do, I'm going to actually change the levels of the RSI. I'm going to delete those and change that to 50. Then what I'm going to try and do is I'm actually going to try and tune the RSI to look like the moving average crossover, give the same signals at the same time. So that's the first step. Excuse me. And then what we're going to do with the RSI, because we're looking for major trend reversals, we might slow it down quite a lot. Let's go to the default, I think, which is 13. Okay, so what we're saying here now is, look, I've come pretty close to doing that, haven't I? There's the RSI signaling a 50-line crossover, so it's going from the sell zone to the buy zone on the RSI, and there's another one, and then it stays up there, and then there exactly the same time, boom boom. So I've been lucky to tune it in, and then there we are. Okay, so and then let's check. There we are, there we are, and there we are. Okay, so that gives you another idea. Use a slower RSI like the 13 and the 50-line crossover, and that's also a good trend indicator, which says the trends now, the strength has changed from the bears to the bulls, and from the bulls to the bears, and And also, look, you must realize you can make these indicators look like other, like for instance, I've just tuned the RSI in to look like a moving average to give the same signals and all that type of thing. The advantage of the the RSI is, however, that it does give divergences, which the moving averages don't give. So there's a fantastic divergence there. So that's a warning of a reversal, and that's why the RSI is most probably superior to moving averages. While we're at it, let's look at the MACD. Has been traditionally a really good kind of indicator. What I need to do is now. All right, now that looks terrible, doesn't it? So what we do is we go into the MACD and we change it. We say, yeah, we'll go with that, but we'll make it a bit thicker. And we'll go with that, but we'll make that a lot thicker. See, now that looks a lot better. So so the MACD also has this. Now look at how the overlap occurs. So I'm just going to put my old. Look at that. It's going from the oversold environment into the over, and there's the same cut. Not quite the same. It's a bit later there, and I haven't tuned this MACD in yet, and that's little bit late. That's a bit late, and that's a bit late. So what we're saying is the MACD is too slow. So how do we make it faster? So we just make it faster. And I don't know the MACD too well, so all you do is you make those faster. So I would put that as a 6. I would put that as an 18, and 19 is good enough. And that I would put as an 8. Okay, so let's see. All right, so now it's a bit faster. Still not fast enough, but oh, that's almost on, spot on. Oh, almost spot on. Oh, still needs to be a little bit faster. You can see that you see how you can tune indicators to say the same information. But I'll tell you the advantage of the MACD later on. Let's just get it. I'm just going to make it a little bit faster, and I'm just going to. You'll see it's 17. That's good enough. All right, so it's all right. That's almost the same. Not quite. Yeah, pretty close, pretty close. Oh, look at that. Yeah, pretty. And what I'm looking at is the gray cutting the 50 line. That's what I'm looking at. Not looking at the red line now. So that's another way you can look at it. You put an indicator. So it's the RSI, the MACD, the trend line violation, the moving average. We've looked at all of them, and they're all giving the same signals. Isn't that amazing? You can tune them in to give the same signals. But the MACD has a slight advantage over the others in that it has this red line. And this red line is actually makes the MACD quite sensitive. So what the signal really is, and I haven't really got a clean signal here, but here's one. The red line comes down, crosses the gray area, and that in fact is where the change of trend is identified there, where the gray cuts over into the, and I see the red line is now below the gray, all the way until there. So that's why the MACD was such a popular indicator, because it identified the turning points a little bit earlier, but sometimes not so good, because if there's a divergence, you can see there, that's a divergence, then the MACD doesn't then it gives the signal too early. But then again, look, there's the sell signal, it stays there, there's the buy signal. So you can see it's a lot faster. If you follow the signal line, it's a lot faster, but it does have whipsaws. So like there's some whipsaws, and there's most probably a whipsaw. So the MACD signal line is actually very fast, and also a good indication of when to get into trends and when to not. So let's just have a look. I mean, look at that. That identified the turning point right up there, and that was a pretty good signal. Okay, but that was a fantastic question to ask. I mean, it's a really basic question. When do you know that the trend's over? And we've now come up with 4 or 5 or even 6 ways of telling when the trend is over. Then you can now decide whether you want to use the MACD, the RSI, the moving average, the trend lines, whatever, because that's a good indication of it being over. Okay, so you can see the RSI showed divergences a little bit better than the MACD. Look at that MACD; it didn't have a divergence there. Here we have a divergence, and And my favorite way of telling the change of trend, or not change of trend, actually just a good entries into the market is a trend line on the RSI, as you may know. So when this is my favorite setup, when you have a trend line on the RSI like that, and you have a divergence, that is one of the strongest signals you can get, and you would enter. Now, strangely enough, that's again the same as the MACD. So it shows you that you can, and it's nowhere close to the moving average crossover or even a trend line signal. And all right, so what I'm going to do is I'm going to minimize the MACD and maximize this. So that's why I like using the RSI. You can look at the trend. So I draw a trend line over the turning points. Oops, look at that, the same as the MACD. This was the MACD's turning point. And then here's the next one. And you see, the RSI had that divergence. So this would have got you in at the correct turning point. So a turning point is a change of trend, and so the RSI trend line is a good indicator of a change of trend. So that's a little bit early. That's the correct one, but you would have in live trading most probably taken the early one, but you could have taken the correct one was actually that one there. And this also shows you that a divergence signal is always stronger. You see, there was no divergence with that one. That was not right, but there was a divergence with that. So I think it comes back to why I selected the RSI as my main indicator, because it's got everything that the others have. It just really has got everything, but it has this divergence little signal that helps a lot, and it also has the trend lines, which really do get you into trends very appropriately. I mean, you look at that one. Look at that one. Now let's go back. Just do it like that. It's a lot easier. And we look at now again. You could have got out a little bit early, but again, if you wait for the divergence, again, so an RSI trend line with a divergence is by far the strongest signal that I have found in my 20-odd years of trading, and that's why it's a simple signal. And it's effective as a turning point identifier, because again, that's where the turning point was, more or less there, absolutely. And if you look there, absolutely, after divergence. So it really is. Yeah, yes, and you can use them as exit signals, but not always. You see, you just be careful. But certainly the RSI trend line. Can be, because you enter there, exit there, enter there, exit there, enter there. Now you could exit too early if you draw them. You see, if you're patient enough to wait for the divergence, then you wouldn't do that false one, and you'd exit there, and you just carry on doing that. And the reason why I like the RSI 4, I like a setting of 4. RSI 4 is that it just makes things a lot clearer. Now that doesn't look a lot clearer, but let me just close, and I'm just going to get out of this. Okay, and let's make it a bit bigger, and it just makes the divergences a lot clearer, and they stand out a lot more. You still have those trend lines going there. Now this is the 4 is obviously more sensitive, so you catch a lot of little changes. So there's that one. But note there wasn't a divergence, and then you get that little change there, and then it says go on, and then there's our divergence again. You see, so just you have to, these divergences are most probably the strongest trading signals that you could most probably follow. I think Alexander Eller actually called them the strongest signal in trading, and they sometimes, you know, you've got to watch them. Then sometimes not that obvious, but you can see that the slower RSI was most probably easier to trade than this faster one, which gave a lot. There's a lot of noise in here. If we go back to maybe 12 than what it was. It's most probably less noise there. You see, it's easier to draw your trend lines and things like that. Okay, well, thanks. That was a very interesting question. Let's have a look at what else has come out. I think the US pairs. Okay, I think the US pairs are trending less strongly in anticipation of the FOMC announcement. Can these be? Okay, all right. So let's go and have a look. All right, so let me just get this back to normal. So remember, the moving average offset is fantastic. If you shift it, it makes a great trend reversal. You know, if it's not shifted, it's a bit ordinary. It's like ordinary. But the minute you shift it, it becomes like a really good. And I'm just this time I'm only shifted by 4. It just becomes. You can see it's just. You see it cuts up the whipsaws very well, and it just becomes a really powerful moving average. So remember that trick. Just shift the moving average and you'll get much cleaner signals, because I used to not shift it, and there used to be whipsaws and whipsaws and whipsaws, and over there's a whipsaw, and you know, and then the minute I discovered the shift, then that wasn't a problem anymore. Okay, all right. So we've got we've got into some technical discussions. Good. Now that we're there, let's go and have a look for some RSI signals and some trend line violations and moving average signals that we can have a look at. Oh yeah, and I'm still busy fixing this one up, and I need to delete the indicator. That's most probably where we need to be, and delete that indicator. Okay, so let's go back to the charts, and they're all fine again. So let's go and have a look at the 4-hour charts, and I think for today I'm just going to look at the 4-hour charts, because with the RSI it's sometimes good to just look at one time frame. I know the best thing is to actually look at a number of time frames and align them, but I found that if you look at, well, my favorite is the 4-hour, but if you look at one time frame, you can do pretty well. So I'm just going to clean these charts up. Okay. All right, so now the one problem is when you're back trading, you can see these signals and you can see the lines, but you don't realize that that line over there, oh, this is a terrible chart, may have taken 2 weeks or even 3 weeks or even a month for the thing to develop, for those trend line setups to develop. See, this is very messy, but you could still do something with it with trend lines. You know, you could you could still do. It's very messy. A trend line, you know. So that's why you've got to. If the RSI isn't clear, then you just got to use other methods and say, all right, where are we now? Where you know, there we are. So and where are we now? We're pretty close to, because there's a divergence there, we're pretty close to a turnover. So if I were a betting man or a trader, which are more or less the same thing, I would say the chances are there's a divergence there, and there's a quick and very basic analysis. We can slap a moving average on here. And go for 13 and an offset of maybe 4. Let's just see what it looks like. No, it's the offset isn't good enough. It needs to be 6. And that's the other thing is, people say, what settings should I use for this? And what you need to tune. You actually tune your settings to a particular chart that you're looking. You don't use one bland one. So in some areas it's quite good, but in other areas you can see it's quite bad. And that's why you need to have 2 methods or 2 or 3 or 4 methods of telling trend changes. So there's the trend line is better, the trend line is better, trend line, and even the trend line. So the trend line is actually quite a good one. I don't know if any of you have read Barry Thornton's course, long candle course. That is really the idea behind trend line trading, is that why calls it a long candle course. If you draw your trend line, you'll find that there's a long candle involved. Now this doesn't look like a long candle, but it is in fact a long candle. There's a long candle. Those are semi-long candles. So that's that's the whole philosophy of that book in a few sentences. So just looking at this, very messy, very messy. But if we do an analysis of it, here's a fantastic divergence. Here's the trend line violation. It's about to go over. It's about to go over the moving average. It's about to go over the trend line. So that's why I'm saying, all signals are that that could be a buy. The moving average. Yeah, that's it. All right. Sorry enough. I don't even know which currency I'm using here, but this gives you an idea of using multiple techniques to analyze the charts. I'm just going to clean it up a little bit. I don't use the moving average that much because the RSI sometimes doubles up as a moving average. I want to delete this. Gosh. All right. So what we've said on a trend line basis, that looks like a good buy, and what would support that buy would be but as an RSI trade, it's not good because the RSI needs to go overbought, oversold, overbought, oversold. But on a trend line basis, that's a good trade. Now the same thing here. This one's a little bit trickier because there's 2 trend lines here. There's that, and then there's the horizontal support and resistance. So that line that I've just drawn in, it's touched there. You can see how it's acted as support there. So obviously I've caught the right thing there. Let's just see. No. Okay. But you need the number of major turning points that it touches is, now this one's only got 1 turning point and 1 turning point, so it's not, the more it touches the more important it is. But here we have a problem where only the market can tell us which way that one's going, because there's no clear indication whether that is the important trend line, or that one at the top. At the moment, it looks like it might buy, but we'll have to sit and wait and see if that buy will happen. It has come out of a. You see, this could be. So when you have like double signals, you just got to wait and let the market tell you. This could be a buy signal over there, and on a trend line basis, that is uncertain whether it will go down or whatnot. Okay, so let's move on to the next one. I'm going to do them all on the basis that we've discussed earlier. All right, now there's no clear trend line there, except for a short-term one maybe there, and a long-term. Now we're in the same position again, where we've got two trend lines that are making a triangle, and that's effectively a triangle. And the RSIs look almost exactly the same. There we are. So if anything, this is a buy signal, if anything. The other thing about the RSI, why I like it, is it is a leading indicator. So look on the price chart, it hasn't violated the trend line, but on the RSI it has. So that's what you call a leading signal. That's a leading indicator, and that's why I like another reason why I like the RSI. Year two, it hasn't violated that line yet, but on the chart it has. So you'll see the more you use the RSI, the more. All right, so let's get rid of that. Again, I find trend lines actually clarify the situation quite well. Here's one where the price is resting on a support and resistance area. Let's just see how good the support and resistance area is. Sometimes the line acts as both support and resistance, which is more. So there, for instance, it's support and resistance. Support, and there it acted as resistance. So that's quite a good line. Now, quite honestly, if it breaks there, this is going to be a long candle. So, but there's no evidence yet that it's going to break. The RSI is not giving us any clues. In fact, it's telling us no, it's not going to break because there's no leading signal over there. Okay, so let's move on to now this one. All right, let's have a look. I think this is one where I said, follow the trend. Now, unfortunately, we're too late. We were a few hours late. That trend started breaking quite early. So you either just stand in the way. In other words, you just sell the lows. Just sell the low and try and join the trend. But let's have a look at it from a trend line perspective. See what there are a few things that have happened here. Let's use a horizontal line rather. That was a major support area. See, it had a lot of touches. Major, so it broke out, and normally it goes and retests, but it didn't quite get there, which shows you that the trend is strong. So, so there's a trend line, and it doesn't look like it wants to go to the trend line. So I would sell this. Now, the argument against selling it, however, is that the RSI is making a divergence. So you're never going to have a deal that really stands out extremely well, but this could range from a buy to a sell very quickly, because if that trend line gets violated at the top there, that's why I'm saying there's always an upper and a lower trend line. That one, if it suddenly bounces up and violates it, then it becomes a buy signal because of that move, because of that divergence that's there. So let's just leave that for the market to tell us how that one turns out. But I think you're getting an idea of using trend lines and momentum indicators and that kind of thing to get a feel of what's going on in the market. Now, here again, we've got this trend line now. Now let's see what. Just refine it a little bit. That's most probably where it should be. Okay, so we've got that where it's acted as support and it's acted as resistance. Now it's acting as support. So there's a big line, and then here's another line down there. So and what is the RSI telling us? The RSI is actually telling us this is a buy, because look at that divergence. Huge divergence. So what we have to do is wait. Either wait for the RSI to go over that line or over that line, or we straddle it, because this looks just as good as for a straddle. So because they both very good trend lines and signals, but you can also straddle that one. Okay, okay, so that's those ones. I'm not even looking at which currencies they are, but they. Okay, let's see the. Okay, so here's the US. See, these are the US crosses that I've got here. Okay, and I'm going to clean them up completely again. Completely. I normally do this over a weekend, but I haven't done that. Right, so let's start using our trend lines. Okay, there's a buy signal there, based on a trend line. So it's you know, sometimes Forex trading isn't that difficult. You know, if you and people use the most complicated tools, but look what's that telling you? You know, it's just and what's more, it's supported by a huge divergence. Now, I tell you what you've seen today is all you need to know to actually make a lot of money in the Forex market. Just look for divergences, trend line violations, and away you go. Let's have a look. All right, so there was a good support and resistance line area, and it actually broke through there, and the market rejected it. So when a good signal, now that's quite a good breakout. When a good signal fails, it is a signal to trade the other way. So that is a definite buy. All right. Here's another one. Okay, buy signal. Exactly where it is now is the support and resistance. Support there, broke through, made a long candle, so you know it's support and resistance, and it bounced there. And then it's also making a triangle like that, but obviously on the RSI, the trend line is telling us to buy. Now, we just also remember that we're doing this analysis in the Asian market, where there's very little volume compared to the US markets and the UK market. So some of these signals look really good in the Asian market, but if you had give them a weighting, you would say they must probably 30. If you see a signal like this in the Asian market compared to the US market, this signal is most probably worth 30% of what the US market. If you saw this in the US market, it would be worth, let's say, 60 pips or 100 pip move. Here, it could only be worth the 30 pip move or something like it. I'm just trying to warn you that the Asian market, the signals you get aren't very powerful. But that's certainly, you know, based on trend lines. There would also be some divergences here. See, that's going down and that's going up. So there's also some divergences. And I'm doing really rough analysis, but it's you can see just this is good enough. Okay, so support and then broke through long candle, support. Okay, so it's heading for support. The RSI, what's the RSI telling us? The RSI is telling us it's the leading indicator. It's telling us momentum wants to break through there. So just based on those two facts, you can say, oh, I think I'm going to sell this one. And there's no divergence or anything. So when there's a lack of divergence, then it's also confirmation that the price is more likely to go down. All right, so let's have a look. And no further questions coming in. Are these? Is this analysis making more sense now that I've explained some of the trend change signals previously? I think that was a great question. Thanks. That really kicked the session off quite nicely and gave it some direction, and also was quite educational, I think, for many people. So, all right, so this one's happening or has happened already. There's the trend line violation. There's the trend line violation here. You know, again, you know, it's it does stand out. Or if you become a fan of trend lines, you can spot things quite nicely. It's about like that. And then this one obviously is just, oh, come on, why is it not taking? You know, you can start splitting the market up into little segments like that. Do you know how many pips to aim for? No, the market tells you how many aim. So what you would do is take this example. There it goes out. You start looking for trend lines. In this case, it's a badly drawn one. That's most probably the trend line there, like that. And you then say, all right, I'm in this buy. When am I going to get out? Oh, I'm only going to get out when there's a trend line violation. So you don't know what your target is because you don't know. So what you do is you say, all right, let's overmanage this. Let's go to the 1 hour. I wonder if this is the same transaction. Let's see, not the same transaction. This is on the 6th of March. All right, so I'm going to go to the 1 hour on the 6th of March. All right, so now what you can do is you can refine your trend line. So there's the new trend line. So you say, okay, I'm going to stay in this deal, and there's it's a more refined line. Okay, so you would have got in over there, and you, as your question says, what do you aim for? Unfortunately, you have to watch this one, and then it goes over. All right. Thanks for that question. I think that's a good one because I can show you something else. It's been a good session, this, because you're asking good questions. Let's go to our website. Now, I don't know if anybody knows about this product, but here we are. It's a Trendline Magic EA. And you go in here, and all I've shown you today is this product is has been developed so that you don't have to do what I said is watch the price go over. So what this does is that you draw the trend line and you instruct the EA. If it goes over, then trade. So here's an example. So you're watching it manually. You think, oh, I'll place a pending order there. It goes down again. You place it. You move your pending order. Move your pending order. Move your pending order. Move your pending order. You don't have to do that if you've got this tool, because what happens is you just tell it, there's the trend line. When it gets to the trend line, you tell it whether you want it to do a bounce trade or a breakout trade, and it will just follow your instructions. So channel bounces, for instance, you say, if it gets there, I want you to sell, and boom, that's exactly what happens there. And on this particular one, if you want to look for a breakout, you say, if it breaks out there, I want you to sell, and it will then control it for you. So this is a pretty handy tool for if you are channel trading or trend line trading. This is a fantastic tool for that kind of thing. So thanks for that question, because the answer is, when you enter these kind of deals, sometimes you don't know what the targets are, and a tool like this can help you stay in the trade until the trend actually changes. Okay, so that's that one. All right, and the other trick is, if you want to refine your trend line, just drill down lower into a lower time frame, and then you'll start seeing clearer trend lines. All right, so here's a really big one. Whoa, look at that. I mean, that's just a beautiful trend line. And the RSI hasn't confirmed it yet, but it just looks like it wants to topple over there. You see, and then after a while, if you use trend line trading a lot, you start seeing the deals a lot more clearly. Okay, so there's it. Not a V, but it's done it twice, a few times. So that's good enough. So again, we've got a little triangle there. What's it going to do? Oh, at the moment, the RSI is saying no. I'm not committing on this one, because I'd like to see the trend line on the RSI to be violated first before that happens. Okay, let's go to the next one. Okay, so we very quickly, and look, there's various rules for drawing 10 lines. There's no, you just develop your own style. I actually think you develop your own style. And I know a lot of people say, oh no, this is the right way and that is the right way, but it's a visual thing. You just sort of, all right, so there we are. So we've got that situation happening there. Again, if it breaks below that trend line, it's likely to be a long candle, like there. See that was a long candle breakout. Long candle breakout. You see, if you get your trend lines right, you'll catch long candle breakouts, and that just looks like it's setting up for a potential one. Down there, there's no divergence here. No divergence there. Okay, all right, so there we are. So we've analyzed some of the charts. I've given you some indication of direction. Again, as I say, your target. Look, if you're trading trend line targets, it's difficult, but obviously, if that had to happen, that sell had to happen, what you do is you must probably look for support and resistance areas, like maybe there, like there, or even before then, as your that seems to be a one. Okay, so and then you say, all right, if I enter there, that will be a 65 pip move, and if I stay in, it'll be a 100 pip move. So that's the kind of thing that you look at. Almost got a double top here. Anyway, okay. Any questions, comments, remarks? I think we've done well in this session. We've covered quite a lot of theory. Not actually theory; it's actually proven techniques. But you know, the fact that you can align indicators and things might be interesting. The fact that a simple trend line can actually change can really help you a lot. I mean, you know, once you get your eye in, you can actually, that's not the right one I wanted to do. You can actually really have fun with trend lines. Either that's the trend line, or you can get a steeper one on a one hour. Yeah, but even if they're rough, you'll find there they are. You can start dividing the market into bull and bear sections. You know, so there's the bear section, there's the bull, there's the, you know. So that's how you can do it with trend lines. So I hope you found this webinar interesting, and I've given you some ideas of how you can analyze your charts. You can use this technique on any charts. My favorites are the 4 hour, but you can obviously go down to the 1 hour or the 15-minute chart and use them there. And so from me, Alex Deploy, thank you very much for your attendance. You've been a very interesting crowd. You've asked really pertinent questions, and I appreciate that very much. So from me, Alex Deploy, cheerio. Bye.